Hello and welcome to the Stock Planner channel. Today the technology sector looked like it's going to go down, so I'm just going to read the news. A lot of times I like to read the news on Simply Wall Street. I have a paid service, it's $10 a month, but you can do the same thing on their free version, but it's limited. You can set up a watch list, and that's what this is. It gives me the news on the watch list. And I'm looking, it's PayPal, it's got a green snowflake, but PayPal, I read last night before going to bed that it's really taking a dive. Yeah, look at that. So you have to be patient. Looking on the right hand side here, this is the top gainers. I don't recognize any of those, but this is interesting. Over the last 7 days, shipping has made a big move, and I like shippers. U.S. Marine and Shipping Industry Analysis is move up. Total earnings for the shipping industry has gone up over the last 3 years. Investors are optimistic. Looking over here at some of the shipping companies, I see a nice, big, beautiful snowflake, which shows me that past earnings is good. It pays a dividend, and maybe the future doesn't look so hot. But investor sentiment has improved. This is trading at $68. I'm looking for a medium price stop. So let's look at ZIM. ZIM Integrated Shipping. With the free service of Simply Wall Street, you get 5 of these in-depth analysis. And the first thing I like to look at is valuation. Current price, and based on free cash flow, the future value should be $221. This is very optimistic. Undervalued stock. I like that. So we're going to look at ZIM Integrated Shipping Services. But before we do, I want to remind you that Stock Planner channel is an education channel. We're doing our own due diligence. You should investigate your own watch list. ZIM is not on my watch list. I'm not sure I'm going to trade it. It's at my price though, and I might want to experiment with it. My choice. Make your own decisions, do your own due diligence, suffer the losses, or win. But I'm telling you, if you can learn this and learn how to share it and ask questions, you're going to be a better trader. Engage. My trading has gotten a lot better since I started engaging on YouTube and elsewhere. I want to remind you I have a free Discord chat, and I give some signals on that you can get started with. Okay, let's get started. Container shipping, Israel and international. Fleet of 100 vessels shipping to 69 different locations. Israel company is on the New York stock market. Undervalued stock. This is one of the reasons why I like Simply Wall Street is the graphics. I like pretty pictures. I'm a simple guy. The health of this company is terrific. It's got great value. In other words, it's undervalued. The past has been great. It looks like it might pay a little dividend. We'll see that in a minute. Future looks a little uncertain here. Future growth. Yeah, it looks like it's going to peak in 2022 and then start declining. That doesn't look past performance in the last year. Look at this. You got to ask yourself, is this supply chain issue going to be persistent? I think it's going to be persistent over the next 4 years until there's new leadership. They got more assets than liabilities. You like that for your financial health? Let's see about that dividend. Yeah. Wow. Oh my goodness. Nobody's selling or buying inside. Well, let's look a little further. Nothing, no red flags here. This is really terrific. If it's believable. Let's see what FinViz, another free tool. You see that trend going up. Red candle yesterday. Target price at 83. That's up in this area here. 68. There's still got some distance. That's $20. But it's a big difference from what Simply Wall Street has said. They said based on its free cash flow, the amount of money that you have to spend on the infrastructure and reinvesting in their company. Based on that and some other factors, it should be trading at a much higher rate. It's got a buy recommendation here on FinViz and some buy ratings here, but nothing recent. May not be followed by too many analysts. Let's go look at TradingView. TradingView says it should be 73, 68. That's only $5 difference. So, and it's a hold on this. So, I'm thinking that this stock, based on this, may have hit its high. Again, it's a new stock, so I don't know. Only 3 analysts don't follow it. That's not a lot. And this is Tip Ranks, by the way. It's free. 10 out of 10. Wow. That's great. And you don't often see all green. This is great. Technicals and fundamentals are positive. hedge fund activities got involved in it. That bodes well for a rise. If you're looking at the weekly, doing nothing but going up, bringing it out to the daily, we see some nice swings. This is the zigzag indicator. It's not really an indicator. It paints these lines based on some future data. And as of yesterday, it knew what it was doing. It was going up, but now, based on some of these candles, the red candles, it doesn't know. Earnings is in March. Ways to go. So based on what we just read, zigzag seems to be going up. Right now, zigzag doesn't know what it's doing. The MACD is right on the zero line, but now it's above it. So that when the MACD is above it, and I'm looking for a change in direction, it would say that it might go down. The stochastic RSI is above in its oversold, overbought condition, and it looks like it might come back around. And the RSI is overbought and said it might come around. So that would indicate down. It's a good company, lots of people buying. So I don't think it's going to change much. I think we can look at around 60 and maybe 80 in the next month or two. It's at its top. So is it going further up? I'm doubting it. Is it coming back at them for a little pullback based on what we've seen in the other situation? Pullback, 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 rise, rise, rise. Based on what we see from the indicators, I think we're going to have a little pullback here. So let's see if I can put together a little deal to capture my feelings that it's not going to move much, but that it's a great stop. And we're looking somewhere from about 76 to 80 and 60. 80 and 60, or abouts. And so I've taken a look at a calendar spread ending in March, about 2 months out, and buying a call in July. It's going to cost me only $60, and it gives me this range here between there. Let's see if there's $80 and $53. Well, no, he said 60, so this is well within my range that I desired. Here's the graph. Look at that. So if it gets in between here and there, we have a winner on our hands over $60 gamble. The max loss I can lose on this trade is $260. That's just we let it go, and it goes way up or way down. But this is a good company, so it's not. I don't think it's going to go way down unless we have some kind of war, which one is imminent. But if there is such a situation like that, and that will affect shipping, might just want to get out. $60, take your loss, go. So what do you think of this trade? 53 and 80. Stays in between here, or a little lower, and here. In the next 2 months, we have a winner on our hands somewhere, and you can take profit anywhere in between. Going up, going down. If it stays the same, you can take profit anywhere in between here. In the next 2 weeks, stays the same, or goes down a little bit, you can take profit there. $60 to make 90 or 80. Anyway, trading is gambling. You take some of the gambling aspect out of it if you know what you're doing and you have a strategy and you have a probability of success and that you can win more than you lose. And on this day where technology looks like it's going to dive based on Facebook's earnings and guidance, I think I'm going to add this to my watch list and invest in it first thing. Let me know what you think about this trade. How do you do your analysis? What tools do you use? All those things I would like to hear about. I want to hear about your trading so I can adapt mine. This channel's getting better. Like and subscribe. We'll catch you on the flip. Like what you're doing. Happy trading.